Hi, I'm Alex and thanks for watching. So in today's video, I want to talk about Hyliion, the hybrid trucking technology company. Now, in doing all my research, I've found out some really interesting things about this company that I've not seen anyone else mention, but as investors are really important that we know about. You don't want to miss those, so stick around. So I'm going to break this video up into sections. Firstly, I'm going to cover quickly what Hyliion do. Then I'm going to look at the deal and the transaction that got them listed on the stock market. Then we're going to look at what we really need to know as investors about the company, both positive and negative. And then finally, I'll touch on what I'm doing about this opportunity. Now, I'm not a financial advisor. This video is purely for entertainment and educational purposes only. However, I am a professional investor. It's my full-time job and I have over 10 years of experience doing this. But let's get straight into it. What does Hyliion do? Hyliion is a hybrid trucking technology company. Ultimately, their goal is to make zero-emission trucks. Currently, they have a product which can be fitted to existing vehicles and which can turn an existing diesel vehicle into a hybrid through a combination of battery and other motors. This has a strong value proposition for its customers. Not only is that cost savings on fuel, it also helps with those companies' environmental goals, creating less emissions from their activities. However, all of Hyliion's growth is based on one of their next products, the Hypertruck, a fuel-agnostic, zero-emission truck. Now, by fuel-agnostic, what I mean is it can either use compressed natural gas, CNG, or hydrogen. Now, the companies say they're going to have this vehicle in the market in 2021. Is that realistic? Well, we're going to come onto that very shortly. So how did Hyliion list on the stock market? Now, on July the 19th, 2020, Hyliion announced a merger with Tortoise Acquisition Corporation, a business listed on the New York Stock Exchange. Now, this business is actually a SPAC, a special purpose acquisition company. That SPAC's purpose was to identify companies in the energy sector based in North America where an investment from the SPAC could help supercharge that company's growth. The company chosen was Hyliion. Now, in that deal, there was also investment from a PIPE. Now, what is a PIPE? A PIPE stands for Private Investment in Public Equity. It sounds much more complicated than it is. It really is just where a private investor, whether that be a private equity fund, a venture capital fund, a mutual fund, anything like that, makes an investment into one of these companies at a value typically lower than the market value. Now, in this case, it's particularly important who one of those PIPE investors is, but we're going to come on to that shortly. PIPEs are actually very common in SPACs like this, and they're typically used when additional capital is needed, whether that be to support growth, to make further acquisitions, or for any other capital needs that may be required with that deal. So, what do you need to know about Hyliion before you make an investment? Now, the addressable market is obviously huge, but is the infrastructure in place sufficient? Now, the shift to green, environmentally friendly vehicles is definitely a trend that's here to stay. Such topics are high on the agenda for companies, and they have a clear value proposition as well, saving customers money on fuel costs. However, establishing the infrastructure is the real challenge here. Now, compressed natural gas is definitely more commercially viable at this point in time than hydrogen. Across the US, there's 729 CNG stations suitable for class 6 to 8 vehicles. Those are the trucks that Hyliion is focusing on. There's less than 10 available for both hydrogen and electricity. Scaling these is massively expensive. The cost to scale both electricity and hydrogen to the same level that CNG is currently at now costs around $12 billion for hydrogen and around $7 billion for electricity. So that's a massive capital requirement. And what's also obvious is that the scale of CNG will also have to expand to make this viable across the whole of the US. Now, looking at the competitive landscape here, Hyliion is also relatively uncompeted in the CNG space. This is certainly a good sign if we believe that CNG is the area of the market which will grow and which will ultimately become the primary option for zero-emission trucks. Next, we need to come on to the product claims. Now, Hyliion makes some strong claims about how their product is superior to other offerings that are coming to market over the same period of time. But you have to remember, these are all prototypes. They're not yet in proper development. So how much trust can we actually put on this information? It's really easy to make these claims, but it's a lot more challenging to put them into practice and prove it. We also need to look at the timeline of production. Looking at this, it's extremely ambitious, and there's not much time to get things wrong or things to fall behind schedule to see setbacks. Now, let's not forget Tesla's had issues in the past, and my real belief is that we will see setbacks to this timeline laid out by them. And that leads me quite nicely onto my next point around valuation. Both the product claims and the timeline both feed into the valuation of the company. So missing the stated performance facts, or alternatively, setbacks to the timeline, will all impact the share price negatively. Also, within the investor presentation, one thing to note when you're looking at them versus the comparable companies is the time period that they're looking at them against. Here, you really need to be comparing apples with apples. So yes, whilst 2021 figures aren't meaningful for Hyliion, if you're looking at them on a 2022, 2023, 2024 basis, you should also be looking at the competitors on that same basis. So I think this is just a crafty trick here from the investment bankers trying to paint it in a different light. I think what's super interesting here, however, is the software play that they have, ultimately collecting loads of data and creating a powerful database. And as we know, data is the new oil. That could become really useful to the company in the coming years. Now, this is the big one for me, customers. They've publicly stated that have a binding order of 1,000 hypertrucks from Agility. Now, this is great news. A binding order is always good, but it'd be good to know the terms behind those which are not yet available. However, when I did some more digging, I came across information that Agility's VC arm, their venture capital arm, the team responsible for making investments into green technologies within the sector, invested into the Hylian pipe. And so they're also a shareholder in the business. It'd be really great to know the economic terms behind this binding order and whether there's just a clever marketing ploy to make it look like there's a lot of demand for the product. Now, I'm continuing to dig to find more information on this, but they're an insider, so you have to consider that. Now, we also need to think about the lockup period. The lockup period is the period of time which, following a deal, investors are not allowed to sell their shares for. In this case, it's 180 days. So for 180 days from the date the deal is confirmed, no investors are allowed to sell their shares. But what that means is, once those 180 days are up, potentially investors in the pipe may capitalise on the potentially higher share price and sell some of their holding. Now, this can ultimately have a big impact if they're selling a lot of shares at one point in time. Now, there's no guarantee they're going to sell their shares, but it's definitely something to keep in mind. So what are my views on this? Well, for me, this isn't an investment I'm going to make currently. There's a little bit too much risk versus the reward that I see. There's a lot of risk around the execution of the plan. Anything goes wrong there, you'll see a decrease in valuation. There's also massive infrastructure developments that are required in CNG and in the other areas of zero emission trucking that the company has no control over, but which ultimately impact the company massively. My personal view is, given where government debt levels are, given the borrowing that's happened to help get through the current health crisis we're in, I don't anticipate there being massive government investment into these technologies. Yes, I may be wrong there, but personally, I think that's unlikely. When looking at where we are in the economic cycle, personally, my view is actually this company is more resilient than, say, consumer car manufacturer. We only need to look back to 2008 to see what happened to new car registrations there. However, these are commercial vehicles. Typically, they're being replaced because previous ones have reached the end of their useful economic life, or the company's investing in new ones for growth. So yes, whilst there might be a small hit from a slowdown, I don't think it will be as obvious as a hit we'll see to consumer vehicles. Ultimately, I also think at some point this company may need to raise further equity. Whether that's done through pipes, secondary offerings, who knows? But as investors, every time new shares are issued, unless we invest more in the company ourselves, our shareholding will be diluted. What that means is if you owed 1% previously, you don't invest any more money, and the company issues more shares, your shareholding will fall below 1%. That being said, I think this company is very well positioned to capitalise on these trends if the market growth and the infrastructure growth supports that. It has great potential, it clearly has a good and experienced management team, and that's key for them to deliver on their plan. However, my concerns are around the company missing that plan, falling behind schedule, and ultimately that will impact the valuation. So for me, that risk is just too great. So thank you so much for watching, and I hope you enjoyed it. If you did, please leave a like on the video, it's massively helpful. It'd be great if this video could be pushed by the algorithm to more people so they could also learn about the company. If you like investing related content, please subscribe to the channel, and ultimately let me know your thoughts in the comment section below. I love getting involved in those discussions. It's really interesting to hear what you all have to say. Now, one final note, my goal with this channel is to create something where people can learn to become better investors. Investing's not hard and anyone can do it. However, I've recently seen a growth in the number of people starting Patreons to help people learn to invest, which ultimately are giving people pretty bad advice. These people may not even have been investing for that long themselves. My goal with this channel is to share the experience I've had from over 10 years of investing personally and professionally, where it's my full-time job, with you on this channel through loads of videos covering basically every topic. I love investing, it's one of my passions, and I love seeing other people getting involved in investing and also getting the same joy from it. So likes, subscribes, comments are all massively helpful for that. So thank you so much for watching, and I'll see you in another video.